Hugh Hendry, back on the Rebel Capitalist show. Why don't you start off by telling me about your love affair with gold during the early 2000s and what you think of the barbarous relic today?
Um, that's a great question, George. Thank you. Because I've lived a long and interesting life, and at the very beginning of my hedge fund career, my hedge fund, I launched it. Yes, I did have a global macro hedge fund, and I launched it in the final quarter of 2002. And for the first 6 months, I was buying a barbarous relic. I was buying it at $300, and Gordon Brown was the premier. Was he the? Actually, I don't know if he was the prime minister then. He was the Treasury Secretary of the UK government, an astute, a Scotsman, well regarded, sober analysis, and he concluded that it was a barbarous relic. And after whatever 200-300 years of accumulating gold, the British government, in its infinite lack of wisdom, at the bottom of a 20 odd year uh, bear market in gold, they sold half of their reserves.
Oh, I
And
didn't know that. Wow.
you didn't know that? No, yeah. And they signposted it like, next Wednesday there's going to be a big sale, a big drop, and they weren't the only ones. The Swiss bank, and others. It was the tiredness of a long bear market. I think from 1982, the S&P had gone up at least tenfold, and
Mhm.
gold, having peaked in 1980, let's say $800, had lost two-thirds. The attraction for me had arisen partly from my analysis on the uh, the increasing creep and significance of China,
Hmm.
and how it was being felt in these again tired bear market metals, processing, refining, metal bashing, businesses that hadn't received a bid for 10, 15 years. Like, smart investors would say, we buy growth companies, we don't buy these companies. Prejudice had crept in to the investment deck. But what lit it up for me was the Nasdaq. Was it the Nasdaq bear market? Yeah, the Nasdaq bear market, of 2000, the peak, and then the tumult, um, and of course it wasn't just Nasdaq, but all equity markets had a profound 50% drawdown. Gold did nothing,
Right.
but on a relative basis, it broke out. It went, "Hey, I'm over here. I'm feeling better." And I was always attuned, to the cosmic wavelength of relative asset performance, and so
Hmm.
I very much was intrigued by that, and I was accumulating that. And you know, gold in 2003 was like trying to buy and hold Bitcoin in, I don't know, 2017 or something. It was like, oh, up and down, and very, very volatile. Um, I remember, I think the month of March, and I maybe I was down 12%. Can you imagine 1 month? And it's like I think it was
On
my
that position or the whole fund?
whole fund. I mean, the whole fund was just I'd leveraged. I'd seen the future. I'd been to. It's in my memoir. I'd gone to the. I'd gone to Milan. I'd gone to see the soccer derby between the two Milanese teams in this great cathedral of cement, the San Siro. And I'd gone with an investment partner, and he kept talking about gold, and I don't know, like, we went out, we drank a lot of champagne, we spoke to a lot of beautiful women. I woke up in the morning with a pizza stuck to my chest, and I had this understanding. I'd seen the future, and again, we were still in the entrails of this, like, 1 in 50, 1 in 100-year bear market for stocks. Um, Interest rates were on their way to 1%, which was radical back then. Um, Quantitative easing in Japan. And then suddenly it all filtered through my mind. I came back from Milan. My ex-wife thought I was on mushrooms, but I was I was on the gold, and I made 50% that year. And I kind of I had that was my year of maximum involvement. I
Mhm.
kept it around in the portfolio up until 2007, 2008. And then I went to zero because I was preparing for the second once in a 100-year bear market, of course, the great financial recession. And I had I correctly figured out that it would even gold would be liquidated
Yeah.
in the market crash that I could see. Yeah. And that came to pass. Um, and then um, I didn't get caught up in the quantitative easing is the death of the dollar. So if you remember, gold then having halved during the great financial crisis, it bottomed in the summer of 2009. Um, and I think did it triple between 2009 and 2011?
I know it just went straight up until 2011.
Yeah, exactly. Um, and so I didn't really. I was intellectually consumed by trying to explain and trade QE is not hyperinflation.
Mhm.
Um, and gold was the opponent, if you will. Um, and if we go fast forward, and so really I've not so I if you I took one big whoa, I picked up this gold joint. I took a big puff back in 2003. I made 50%. It underwrote 15 years. Um, and I've been fascinated with it ever since. But I've not really been. I'm not really running a risk book since 2017. But in terms of backup to today, um, everyone's fed up listening to me um, because it's in a clear and undeniable trend. I mean, here we are. My God, almost the arc of half of my lifetime, and gold has gone from $300 to 5,000. I know it'll be 6,000 before summer. So what's that? It's gone up 20-fold since 2003. And I keep saying, yeah, I'm done with it. Cycles, long cycles, and I salute it. I applaud it. Um, but my conceptual problem is the mass, the market value of the entirety of the proven and probable reserves of gold, plus everything that's been taken above ground, times the present um market price, gives us a total mass, if you will, something close to 40 billion. With lots of alternative assets, you don't have to answer the question of valuation worth. Um, and gold's one of them. People never kind of conceive of so like with stocks, there's and is it a discipline? Is it something that just gets in the way? But we have valuation metrics. Whereas with gold and silver, it's like, yeah, more people are buying than sellers. And it's like, yeah, okay, I hear that. That's the manifestation of trend. But I think we can go deeper. I think we can say more intelligent things. And so my only complaint about for the first time in 23 years, gold doesn't have that convexity, that capacity to triple. If it
Mm.
were to triple, it would be $120 trillion. So, and then people go, yeah, okay, that would be one times global GDP. Okay, I hear that, but that would be like two times the market valuation of US stocks. And like, it's not like US stocks are cheap or
Right.
lowly rated. So I'm confronted by uh, can something which is for yes, I don't think the US stock market can triple in the next 5 years. Yeah. Um, and so I don't think gold can triple. And so I think you can still have fun, however, because I did this little AI graphic and it was Chinese lanterns and they were coming out of my swimming pool in St. Bart's and ascending into the beautiful tropical sky at sunset. Um, and they had little names like Bitcoin was on one, palladium, platinum, silver, of course, the Nikkei stock market. and they were floating higher. And someone said, "Where's gold? Where's the gold lantern?" And I was like, "Brother, gold just went it went up so fast. I mean, it's now passing the moon. I can't show you in the frame. What I mean by that is, um, so the energy release of that great mass um, of what gold is it's become its own solar system. It is the sun, and the whole energy and its propulsion from $300 to 5,000 is creating the energy which is driving the satellites. So silver. Actually, I was going to say silver. Silver, now is $6 trillion. And to
Yeah.
put these,
What's the market cap of gold? Hugh, you cut out when you were
oh,
talking about that.
did it cut out? Well, hopefully it's captured in these. Anyway, the 40 trillion, George, 40 trillion. So
Currently.
yeah, 40 trillion. So the US
Wow.
stock market is 60 trillion. Um, the The long end, your duration, US Treasuries, I know no one wants to talk about it, but the market value of all US Treasury bonds with not a maturity, but a duration of 7 years plus
Mhm.
is probably like five, six, $7 trillion.
Right.
Just for another perspective. So I said to you, silver is $6 trillion. The entire market value of Japanese stocks, that's $8 trillion. So, like, I don't have an invective against gold. I just, I'm lazy and I'm shooting for the stars. And
Right.
so, one of my metrics is I kind of like things which are lighter, if you go with that analogy with the
More
market.
asymmetry is what we'd say.
Yeah, with the density of the thing. And I even silver, like, okay, so if I had $6 trillion, would you rather? It's one of those things. You know, my kids used to play these damn philosophical, silly games. But would you rather, if I gave you $6 trillion, would you buy all the silver and all the proven reserves in the world, or would you buy every Japanese company in the world?
Right.
Stock, equity. Uh, there's no right answer, but I would buy every Japanese company. So
Yeah.
gold.
So, I know you well, and I've been fortunate to learn a lot from you. And one of the things I always hear you talk about is your favorite or one of your favorite chart patterns is when there's a very long term, like a 20 or 25-year chart where, like the Nikkei as an example, it's hitting highs that was like in 1990,
Yeah.
right? So in 1990, let's just say it's 40,000 and it goes down, 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 and it gets back up to that high, let's say in 2025, and then it exceeds that high. So it goes to 45,000. That's one of your favorite charts, regardless of the asset. So I think it's really interesting that you bought gold when it was at all time lows and you're kind of a value investor, but then at other times, you like to make trades where you're buying things at all-time highs. So I think that the what I'm trying to communicate to the audience is if you really want to be a good investor, you can't get stuck with just one tool or one trick in your bag. You got to have multiple tools there, and you got to realize when there's a good trade that's a value trade, but you also have to realize when there's a good trade that's at all-time highs.
Yeah. So they remember the so when I was buying gold, it certainly wasn't as a value investment. And remember, we were talking about that period 2002, 2003, and NASDAQ and the German stock market and many others, they they'd fallen the best part of 70 or 80%. Amazon had fallen from 115 unadjusted to 5. Um, and so there weren't that many stocks making all-time highs. Everything had been like boom, like destroyed. Um, but again, there's you can always elucidate. You can always it's all about just asking the right question to find the combination lock, yeah? And back in 2002, 2003, in this world of asset price compression, the most informative was actually relative price energy or momentum vis-a-vis different risk assets.
Okay.
Uh, and so I
Okay.
would sit there and I would just look at, I don't like, a commodity stock and I divide it by the corn price. I mean, probably didn't do that, but um, I I changed the currency moniker on stocks. I flip charts upside down. Like when you're shorting, you kind of want it to go down, but like I'm really dumb. When I look at a chart and I'm looking to make money, I expect it to go up. So I would flip I'd flip the y-axis.
Yeah.
So my
Just as a
short,
psychological trick.
it's like just anything just to kind of wake up. You
Yeah.
know. Now the my my favorite because um, it's just lazy, but I think there's like physics involved, atoms in the universe and pricing regimes, and I've seen this so many times through my career, through indices and through lots of idiosyncratic stocks that they have, you know, the they have bull markets and bear markets, and the bear market, the longer the bear market, when you finally pierce the price barrier being the previous generational high,
Yeah.
depending on the longevity of that barrier, when it pierces, the energy is is dope, right? And I think
Mm.
the best recent example is Nasdaq. We began Nasdaq had fallen 80%. I was buying gold, yeah. But and thank God I did, because you had to go 17 years into the future, and then Nasdaq had reclaimed where it had been in
Yeah.
March 2000. So 17 years. But when it pierced it, you didn't have to be able to predict AI. You didn't have to know anything about technology. You just had to own Nasdaq. Why? Because today it trades five times greater. A five bagger return a on dumb money. I didn't know anything, but I was watching the surface area,
Yeah.
which is governed by the people whose job it is to know everything about Nasdaq. And for 17 years, they had no tolerance. They had no ability to see into the most immediate future. And so they were always a seller when the price, that was the regulation. The
Mhm.
regulation was the uncertainty of the investor expertise with regard to the future. But when the price pierces and pierces and pierces, it's telling you that the people who know it best are changing their narrative, that they can see something and they can see something very, very
And
positive.
you gotta like the Nikkei now, right?
Yeah. So the Nikkei, okay, I'm going to say to you, is going to be 200,000. Yeah. In the
What
next
is it
five
now?
years. Well, so the ninth, I don't know, the 29th of December, 1989.
Yeah.
I was still at university. um, the Nikkei hit 40,000. Okay. And in the last 2 years, the Nikkei exceeded 40,000. And now, I don't know, is it 46, 47? Is it 50? Is it
You can pull it
55?
up. Keep talking, I'll pull it up.
You tell me.
Yeah, it's 53.
53. There you go. Well, that 53 in the next 5 years, easy peasy. It's going to touch 200,000.
Hmm.
Yeah. I've seen it so many times.
Yeah.
Um, yeah. And so silver, where's silver going? Silver keeping the two handle. Silver's high was $50.
Yeah.
Silver's bear market was 10 years longer than the Nikkei. Um, but silver will go to 200, 250. Right. So what is it now? It's like 100. It's going to double again. Right. Easy peasy. But silver's going to double. And if you think of how hopefully there's some consistency in what I'm saying. I'm saying to you that convexity is interesting. I said to you that silver is now $6 trillion. It's $100 and it could go to 200, 250. So it could become like a 12, $15 trillion asset. The Nikkei is $8 trillion, but I think 8 trillion could become a $40 trillion asset. So it's got more reach.
Yeah.
Yeah. No, I'd own both. I'd own both. Now you can turn that. We could go into the equity market. Now, the indices, um, when I say it's going to go up 4 times, 5 times, I say that with more confidence than I can with stocks, right? Because stocks have got so much idiosyncratic noise, fuzz, that's kind of harder. With an
Right.
index, you've got 500 in the S&P, you've got 2,000 in the Russell. I've no 225 in the Nikkei. The topics, I think, has 2,000. So the idiosyncratic fuzz noise goes away. We can be bolder. But let's do it in stocks. I was talking to someone last week, and I looked at my first charts of the year. I looked at Nokia.
Hmm.
I'd mentioned Nokia last year because Nvidia took a 2 or 3% equity stake. I mean, my God, they could buy Nokia, but they took 2 or 3%. And what was revealing is um, when we get the leap to, is it 5G, 6G? I don't know, but like Mega G is coming. Um, and the Mega G, AI needs the Mega G,
Right.
right? There's no point having all this. There's no point being like the smartest human ever if you're off grid and your phone is on 4G. We need Mega G. Um, and so there's things happening there which could ferment a new bull market. Okay. Now, Nokia peaked again in the year 2000 at $50 on the ADR. Today, it's $6.50. It's down 88%, 87% from its all-time high. And it stayed down there. Now, the reason it stayed down there, it hasn't made any price lows in 10 years. So it's on a drip. It's the patient is in a coma, right?
Yeah.
All these terrible medical metaphors. It's in a coma, right? Um, but Nvidia's putting some cocaine into the drip, and it's like, oh, it's beginning to move a little bit. Anyway, the reason why it was in a coma was um, the the base cell software for running the data networks was the profit opportunity was eliminated by the Chinese Communist government saying we want to own that market. It's strategically important. And so they then underwrote that Chinese company, what was it called? Hawaii.
Oh, yeah, yeah. I know who you're talking about.
Yeah, they said, listen, lads, we want you to own that. Right? And it's a lot easier to own an industry if you don't have to make a damn profit, right? So poor Nokia and Ericsson are over there being suicidal in Finland and Sweden. No light, no vitamin C, no fucking profit. Excuse my language, right?
That is vitamin D, but
And so that's why it's been like that. Okay. Now, if Jensen, if he's if he's if he's got it right, and Nokia goes into a bull market. So the fun thing is, okay, $6.50. The next, just chart wise, the next important point would be breaking 15, but that's on the way to 50. So
right.
6.5, and you're like, why don't you just buy it now? Truth is, I would buy a tiny amount, yeah. But really, what I want to do is I want to buy a lot if it trades $55.
Right.
And the reason is if it trades $55, it's going to trade $250. So I'm saying to you, Nokia ADRs today are in the market. They're selling for $6.50. I'm telling you that the largest company in the world, Nvidia, bought, I think, 3% stake in it. And it's kind of going, this is interesting. Mega G is going to be really necessary. And I'm putting the two together saying, fuck, 6.5 could be 250 in the next 5 years.
Mm.
Boom, you know. Intel's another one like that. Intel, I mean, there's nothing as bombed out as Nokia, and maybe Nokia just never comes back alive. Maybe. We live with imponderables. We haven't seen the future, even me. Um, Intel is $26 shy of its all-time high again in the year 2000. So Intel's about $53. The high was in the 70s. Um, Looks like it's going to take it out. If it takes it out, well, Intel's again going to be like a $250 stock. So, um, and there's lots of these. I'm trying to organize. We were speaking about this. My writing consumes me. I don't know where the hours of the day disappear. But on my Substack, one of the services I offer is I take the share price of every index constituent. I'm about to do it for the S&P this week or next week. And my chart series begins in 1973.
Hmm.
50 years. It's fascinating, George. I calibrate it on and I've got like a 20 quarter, 40 quarter moving average. And it's like chart porn. We look at it and then it dissolves and another one comes up. It dissolves and another, and then suddenly you see it. Suddenly you see the high, the new high. And you're like, stop. What is that? All right. And you take notes, and then that's the next research project. And you get to the end, and you might find that there are 10 stocks in the 500 that are flagging the emergence of a new bull market. And then you try and just understand what's going on. That's kind of what I do. I ran that for Japan before Christmas, and oh my god, I was like a kid in a candy shop. Everything just it's like everything look. I'm like, oh my god, that what's that? What does that do? You know, so that's asset investing.
That's really interesting. So because there's so much in the news right now regarding Japan, but it's all about the long end of their curve and them coming in and trying to prop up the yen versus the dollar. I don't hear much about the Nikkei. Maybe that's just because I'm U.S. centric, but it's really I love looking at it through that lens because that's a strategy that you don't really hear about too often is buying things when they breach a prior all-time high that was possibly decades ago and the psychology behind why that's so powerful. So
Yeah.
but focusing on Japan, what are your thoughts on what's happening with the curve there, what's happening with the currency?
So and let me just touch upon one final thing on
Sure.
those
Sure.
price regimes. Why don't I just buy it at? Why don't I buy Nokia at $6.50? It's going to
Because
two
it can
fifty.
stay there for the next decade.
There you go. There you go. There you
You
go.
gotta have a catalyst,
Yeah.
and
Well,
whether it's a fundamental catalyst or a technical catalyst, you gotta have a catalyst.
yeah. Like as you know, silver actually sat for 10, 15 years at I don't know, like somewhere between 20 and $30. And it just, you had no carry, nothing. So
Alright.
that's why I'm like, you know what? The bit from 6.5 to $50, that is so risky. But yeah, you make a lot of money, but it's so risky. The bit from 50 to 250, that's easy. That's cream. And I'm a
Mm,
cat. I like cream. Anyway,
right.
so Japan is the same thing of listening. The market is always telling you. Sometimes it's telling you in a foreign language. So for my mind, the Nikkei going to 200,000 is foretold by the currency, by the dollar yen. And the dollar yen is breaking price regimes. Its atoms are escaping. The universe is suddenly offering a different perspective. Uh, Dollar yen has had like the greatest and most significant devaluation of any currency in the last 50 years,
Right.
any currency of import. No one's really talked about it. And all people have, are still trapped in the atom, if you will, being. Remember that oh my god, showing my age, but Atari, the
Oh,
computer
yeah.
game console.
Oh, yeah.
Yeah,
Yeah, my dad got me one for Christmas when I was, like, 7 years old or whatever, the brown thing, and it, like
that's right.
like
But do you remember the tennis game? Right?
yeah,
Boom, 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 boom,
I
right?
think it's called Pong.
Well, that I play Pong in the markets, right? And you, the the Pong in dollar yen is the whisper is 200.
Yeah, right.
But everyone else is playing Pong, and they know that when it get like, when it gets to the top of the screen, it goes to the bottom of the screen. So they're like, "Oh, yeah, 160 back at you goes to 110. 110, where's it? But it goes back to 160." I'm like, "Baby, baby, baby, we are ponging out of the universe, and 160 becomes 200." And then the curious thing about investing is just now where we are just now, I think we're like what we the intervention, blah blah blah. I think we came back to about 153.
Yeah, yeah, yeah.
Now the probability in my head, I'm making this up, but the probability of dollar yen going to 300 from where it is today is max 15%. I said 300, yeah. So um, that's the yen halving versus the dollar. I'd
Mhm.
say so my 15 is a lot that percentage that I attribute is a lot higher than the universe of risk takers today. Okay.
Right.
I think they would have that as 15 basis points. For me, it's 15%. But the more interesting point is if dollar yen goes to 200, my probability that it goes to 300 becomes 55%. So I'm
Right.
talking about there's a kind of reflexive probability order where because this happens, your confidence of in the next leg just becomes insanely high. And
Mhm.
you really increase your risk position into it. Now, again, forgive me, I keep talking about my Substack, but I've written a big paper on this. Actually, you can buy it on Twitter, would you believe? But the
What's your Substack, Hugh? Just give a quick plug.
I'm acid capitalist. Like
Okay.
I've got it written on my chest somewhere.
You're a walking billboard.
I'm sponsored by life. But yield curve control, the Bank of Japan trying to keep the bond yields low. Yeah, I've never known about this. Like, so it seems like central banks are like omnipotent. They can do anything. Can they? I don't know. I think the Bank of Japan was buying JGBs at a time like for the last 15 years. Yield curve control, I think, was from 2006 or 2009.
Yeah,
Uh,
but you never got the counterfactual. Maybe rates would have been the same. It's just based on growth
that's
and inflation.
there you go. What if actually the Bank of Japan's yield curve control was pro-cyclical? That actually there was no impetus for inflation. There was no great desire to sell off. So I'm more in that camp.
Yeah.
Then post-COVID, things changed, and the private market's like, yeah, yields have got to go higher. And I think
But their
what's
nominal GDP has really gone up as well.
okay, we'll come to that. Um, but what I think is to be commended is the Bank of Japan. I think they took 12, maybe 16 months to kind of go, what the fuck, what the fuck, like we're the boss. And then it just went and it took out like a cigarette. I was like, you know what? Screw yield curve control, right? And they scrapped it. Like, so they didn't have sometimes there's too much face. And, oh, I'm not doing it. I'm not. They're like, okay, no more yield curve control. Okay. So let me try and say something sensible. The malaise in Japan has been the absence of real wage growth. Japan, the citizens, the wonderful, I love Japanese, the wonderful citizens of Japan have had no real wage growth in 50 years. None. In this century, it has been negative. They're working more for less in real terms. Um, in in COVID, and and we talk about how their whole system is set up for inflation. They've got nitroglycerine because there's the Bank of Japan has been buying the debt. The debt is 2.5 times GDP. Nitroglycerin, boom, it's gonna blow. Um, and the US is the kind of an earlier stage of that. Again, this is why I think gold went from $300 to 5,000. It's all interconnected. We get COVID, and we ain't seen nothing. Like the balance sheet goes crazy, crazy money printing, and the US it gets 9.5% inflation, and it gets for a time real wages become positive. You get a real wage increase in America. Okay, now our attention is Japan. In Japan, which has 2.5 times debt to GDP, which was like deficit spending into the pandemic. Yeah, they got 3.5% max inflation, and real wages never went positive. Never. In fact, they're down in the basis of the last 5 years. So again, the Bank of Japan's like, man, nothing works. We buy bonds, we buy more bonds, we buy more bonds. Nothing works. And what is the objective of the Bank of Japan? The Bank of Japan wants real wage growth. Okay. And I think what they've concluded is the only way you get real wage growth is via the currency, not the bond market, the currency. Because what happens, and again, why the Nikkei is going to trade 200,000, what happens is a devaluation transfers wealth within the host country, initially from the personal sector to the corporate sector, i.e., profits boom. Profits boom. Okay. Now, profits boom. So the stock market goes higher and higher and higher as the currency goes lower and lower and lower. It's like two different sets of stairs, one going up, one descending. And the problem in Japan has been the profound conservative asset posturing. Like, so Japanese are old. I've met some of their younger ladies. They're very cute. But by and large, the Japanese are old. They own cash. And been unable to encourage them to leave the cash. But you bring the currency down, you take the Nikkei to 100,000, and all those old Japanese rich people, they will be in the stock market. And that'll be the next leg to 200,000.
Mm-hmm.
And so as corporate profits, as the stock market goes up, you're changing the regime. And it's like, you know what? We should pay the good folk more money. We should give them a real hike. So then what happens? Now you've become a sovereign Henry Ford. And when is it? I don't know. When did Ford like double the wages of his mechanics? 1915 or something? I don't know.
I don't know. Yeah.
And people are like,
the story though.
Henry, you're crazy. You're crazy. Maybe. But what he was doing was he was doubling the wages of his customers. And his customers were buying more of his cars. And when they bought more of his cars, the the corporate profit, the P&L, is a leverage convexity monster. If you increase revenue by 2 or 3%, you increase profits by 10, 15%. So I can see a virtuous circle.
Hey guys, if you're tired of the BS from the mainstream media and you really want to cut through the noise and understand what's happening in markets and in the global economy, and you want to meet and learn from the top macro thinkers, and probably more importantly, the contrarian macro thinkers, then Rebel Capitalist Live is exactly what you're looking for. And to be clear, this isn't some boring finance seminar with corporate sponsorship and talking heads. This is going to be a high-energy, freedom-focused event that's going to help you not only protect your wealth, but grow your wealth as well. In the past, we've had speakers like Lynn Alden, Ron Paul, Robert Kiyosaki, Peter Schiff, just to name a few. And here's the best part. You're able to hang out with hundreds of your fellow rebel capitalists, people who actually get it, people who value the same things you do, like freedom, liberty, and free market capitalism. But here's the catch. These tickets are going to sell out very quickly. And as we get closer to the event, the ticket price goes higher and higher and higher. So you're going to want to get your tickets ASAP. This is an event you're not going to want to miss. So to get your tickets, you can go ahead and click the link in the description below. And I'll look forward to seeing you at Rebel Capitalist Live 2026 this May in Orlando. I'm thinking that through. Because what you're talking about is devaluing or letting it go to 200. Would that increase inflation to the point where real wage growth would be just as difficult? Because if you increase inflation, let's just say 5%, now all of a sudden your bogey is 6% on wage growth as opposed to 2 or 3%. So how would that play out? You see what I'm saying? I mean, you could get into this. Go ahead.
100% understand you, George.
Okay.
So again, remember, it did not play out. So we had this little laboratory test called COVID, and even in Japan, they managed to get price inflation. Now, it wasn't as much as we got in America, but for what they achieved versus the previous 50, 60 years, it was a lot. But it fizzled out. Okay. And my point to you is, so did it fizzle out because, to your point, it snuffed out? The prices went up and then wages couldn't match it. What happened, I think, was this notion that inflation, it's not just okay. Breathe. Inflation is a monetary phenomenon. Okay. But there are other very important absolute truths you can say also. Inflation is a cultural phenomenon. It involves the collective spirit and resolve of society. Okay. You don't get inflation absolutely with just one of those ingredients. You need a kind of a melange of the two. So what I want to say to you is the Bank of Japan protecting, if you will, the yields, the yield curve, bond prices. What it was doing was it was sponsoring the inane level of risk aversion within the Japanese investment community, both from personal investors owning cash to banks who are unwilling or don't have the risk resolve to lend to make new loans domestically. Okay. What I'm talking about is an environment where, because the currency ignites the corporate profits and the profits ignite the stock market, which becomes not a metaphor, it becomes a thermometer for animal spirits. If the Nikkei is at 100,000, I will say to you, 100% animal spirits in Japan domestically are way more bullish than they are today or they've been in the last 50 years. And then that bullishness will affect the banking C-suite, like the biggest Japanese banks. Again, they'll get the little cigarettes and they're like, oh, you call me crazy, but I think we should start lending in Japan. They have not really lent in Japan since the decade of the 1980s because they got their head cut off, right? But memories are long, but they change. So my point to you is the currency, I believe, most importantly, is going to ignite animal spirits via corporate profits and through a stock market re-rating. And that animal spirit will bring forward the monetary momentum that can support higher real wages and higher prices in general. What you want to see the stock market. You want to see that, and Japan is the perfect place. You're seeing the stock market rise and you're seeing bond yields rise. That's actually a great combination.
Yeah, right. Right.
Yeah, that's saying that we are finding the will, we're finding the resolve to grow. That we haven't hit a level of long-term interest rates which is restrictive. You know, yeah, America's going to grow at 5% in the fourth quarter. If you look at the whisper, the now casting,
Mhm.
um, and its 10-year and its 30-year yields are greater than they are in Japan. So, Japan stocks are going up and the yields are going up because this is what you want. You don't
Yeah.
want the stock market, so yields fell and the stock market went sideways because the place was moribund. So that's what I think is happening. Paradoxically, because we did talk about gold and we could come in because I want to link that to America because um, you know 25 years ago, Japan would not be allowed to devalue. America would not allow it. Yeah. Um, but what's happened is Japan's become kind of insignificant on a trade basis vis-a-vis the Chinese. And there's this global coalition of the willing against the mercantilist. And so it actually kind of helps America. It hurts China way, way, way more if the yen goes to 300 than it hurts America.
Right.
And what's happening in the US? The S&P has just gone through 7,000. Is the S&P going to triple in the next 10 years? Is it going to go up fivefold? Surely not. Except something it's very complicated to discuss. Let's see if I can do it, but something seismic is happening that's on a par with Paul Volcker in 1979. Um, Paul Volcker, again, is known for tightening the monetary system. Yeah, high interest rates. But really, what he did, the potency, was a function of how he shocked American economic society in 1979. He shocked it. He was profoundly convincing that he would be recklessly irresponsible, that he would bring on a, a very sharp economic recession
Mm.
unless society pivoted and changed its risk posture. So, what I mean by that is in the 1970s, we had inflation, we had monetary inflation, M2 growing at, I don't know, 25% per year. So we had the monetary accommodation that could support higher and higher and higher prices. Yeah. I i.e. loan growth was probably 2-3 times that of nominal GDP or real GDP. Um, and Volcker said to the banks, I want you to stop this. Like, so a bank has um, is is binary. It can kind of binary. It has two options, two polar opposites. It can lend to the private sector. It can lend to the government.
Right.
These are buying treasuries, right?
Right.
And so in 1979, the book is, I'm making the number up, but 80% I'm lending to the private. I'm risk seeking. But in being risk seeking, Volcker had identified that they were the oxygen that was supporting higher and higher prices.
Hmm.
For him to contain inflation, he had to cut the oxygen, and it was the banks. So he says, "Guys, I keep telling you, I'm going to raise interest rates. I'm going to bring the economy down." Like, no, no, you Fed guys, no, and he did. We 1979 to 1982 was the deepest, sharpest contraction in the U.S. post-war economy. Of course, prior to COVID and pandemic. Um, and and as he did that, the banks went, holy Moses. And they went from 80% loans to 80% loans to the US government. And that was the beginning of the great moderation. Okay. I think, and so what I'm saying to you, Volcker shocked society in order to generate change in deep-rooted investment and economic behavior.
Right.
All right.
You think Japan's going to do the opposite?
No, I'm going to stay in the US.
Okay.
I'm going to use Japan as my bridge. There's an element where I can use with Japan. Now I'll wrap this up, George. Forgive me, but I'm saying to you that I wrote a paper in 2020, the dawn of chaos, and I was tapping on this logic, anti-logic, and I was saying we should make Joe Rogan the Fed chairman. Remember, I was like, make Joe
Yeah,
Rogan.
yeah, I remember you saying that.
And again, I was not because he's a great podcaster, he is, but because of the shock. You'd be like, if I'm in a bank, I'd be like, what? Do I really want to buy Trent? Do I want to lend to the government, or do I want to be over here? You know, I'd shock. So we didn't get Joe Rogan, but we got Trump 2.0. Now, what Trump is trying to do is he's trying to. The number one concern: why is gold at 5,000? Why is everyone? What with the great names, the Stan Druckenmillers, the God, the legend, Stan. He's terrified of the intransigence and the inexorable creep of US government debt to GDP. Terrified of it. That is going to bring on the demise of the dollar fiat regime. Okay. Now, it's not fate, the debt to GDP. It's been inexorably rising, but that's not fate. I don't think austerity, like just cutting aggressively, I don't think that lowers the ratio because I think it knocks GDP at the same time. And at best, the ratio stays flat. And at worst, maybe, again, with operational leverage, the ratio goes up because the economy slides. Okay. What Trump is trying to do is he is trying to shock economic behavior to accelerate US GDP. Trump is taking the pitch book from Japan in the 1980s and China since 2008, and both achieved 5-6% real GDP growth. If America does a decade at 5 real, debt to GDP ratio will fall. And the dollar fiat currency will continue its reign as king of, maybe it's a sun king, but it's king of fiat. Okay. So to shock the system, Trump's like, that Fed guy, he's going, right? So I'm cutting the head off. People are like, what are you doing? What are you doing? No. Gone. Okay. Tariffs. I'm doing tariffs. Fuck the Chinese, you know. Stop. You're a madman. You're going to destroy the economy. Well, here we are 12 months later, and the economic thing's being revised higher. He goes to the Chinese. And of course, the Chinese, he goes to the other the coalition of friendly creditor sovereign nations. So, you know, before he goes to Japan, of course, he goes to Arabia, he goes to all the Arab countries. And all of them have got their savings in risk-free dollar assets. And Trump's like, no, it's like, listen, my brothers, come into my tent, right? Spend that money in my economy, taking in physical plant and stock and software, but put your capital on the ground, take risk with it, and I become your best friend. And you don't get a coupon, you get equity. All right? And you get expertise, and you can build some of that stuff back in your own country, right? So Japan is the biggest creditor nation, got $1 trillion. And the deal is like strategically, you are the eastern flank. You are how we take our Chinese enemy down. And we need your currency at 300. And we ain't gonna bitch. You know, Trump will say 10 things about the yen. He'll tackle the yen. That's what he does. Yeah. He breeds confusion. He's an agent of shock. But he's like, you're going to 300, you're going to transfer that $1 trillion, and you're going to I'm going to give you equity everywhere you want, and we are going to be tight. And again, the stock market's going to be looking at that, going, "Wow, I'm going higher. I'm going higher." So, but so we're in this period of incessant shock. Venezuela, boom, guy's gone. Iran, boom, guy's gone. I think um, and so gold's like, ah, ah. The people that are responsible for every marginal leap in the gold price from here, they detest Trump. They want to be Europe. They're the Stasi. They're I don't like them. They're elite centrists. They're billionaires and they've got a moat around their palace. And they're
Mm.
like, I like it the way it is. Stop. Right. And I don't like, and it's like, and my toy, when I'm throwing all my toys out the pram, I buy gold. Because it's like, look, gold saying you're crazy, gold saying you got to stop. Um, and I think that is bunkum. What is happening? And the next other thing, forgive me, uh, he comes in to set credit cards. He's like, hey, you don't charge 30% to my people. You charge 10 or whatever. What? What? You can't do that. It'll be a disaster. Maybe, probably, maybe not. I don't like. So Japan, and I think Trump will copy this. Like, he's already suing Jamie for 5 yards at JP Morgan. The next thing's like, I'm reviewing your banking license. It's been brought to my attention that you've not grown your American loan book in real terms over the last 15 years. I gotta tell you, I'm putting you on a 3-year review, and I gotta see 5% real loan growth in your US portfolio of loans every year. I'm going to test you every 3 years, and if you fail that, you lose your license. So Japan had strict, like, monetary, like we used to talk about M2. They had the banks, to keep their charters, had to
Yeah.
be expanding loan growth.
In the
So
1980s, to be clear, guys, in the
1980,
1980s.
1980. So I've got the Arab nations, I've got Japan, and they are swapping dead fixed income, which belongs to another generation, into on the ground American equity, right? That's going to accelerate economic growth. Of course, we haven't even mentioned, and I'll just say the name, but the idiosyncratic fireworks of AI, of course, is having an impact. I'm going to be telling the banks that they've got to loan more. I'm going to change the central banker and take rates to the floor. I've got a tariff system which basically I'm now doing global worldwide taxation on the rest of the world. I got to tell you, I feel really, really confident that debt to GDP is going down. Um, we're
It
just
has
in this.
in Japan, I know that. It's
Yeah, yeah.
since 2020.
Mm.
How do you reconcile GDP and the labor market in the US?
Well, one thing you can say is that um, we are hogging presently quite an extreme level of labor's share of GDP. The Gini coefficient, the lack of distribution of wealth. But if you look at, there have been previous troughs of labor compensation to the total pie of the economy. That's corporate profits, that's economic rent, interest rates, something else I'm probably forgetting. Um, we've never been so low, but there have been other troughs, and all you can say is that we have never experienced consumer price inflation by targeting real wages. When wages are so low, when you've had no real wage growth in 50 years, best thing you could, the most virtuous, like where you get it, like rather than getting it in the ass, like on both sides, everything is virtuous, just expands, is when you've had such a compression in real wage compensation and you target it, you say, we want it higher. Because again, what it does to consumption and it flips to GDP and then it leverages corporate profits. So like, we without Trump, we had we were going one way, which was the death of fiat. We had accepted that the US economy, having grown at 3.5% compound annually for the best part of 50 years up until the great financial crisis, it was now going to grow at 2, and maybe that was going to slide to 1.5%. And the story was really in emerging markets. Now, in that world, debt to GDP would just go higher and higher and higher and higher. And
It'd
at
be
some point,
the Japanification of the U.S.
yeah, there you go. That's where we're headed. But American society invested in Joe Rogan, like Joe Rogan equivalent, a shock jock, and it's the shock, it's the defibrillator, right? Now Gold's going, oh my god, oh my god, oh my, but I'm like, honey, shut up, right? I got this. This patient's coming alive again, right? And so I think Gold 6,000 has done its job, and then over the next 18 months, you start seeing people going, all the shock and crazy thing about Trump begins to reveal and manifest itself in a higher rate of economic growth and stock prices. And lastly, a stock price like Boeing. So who knows about the Mag 7, right? Because they are in an idiosyncratic, they're in a moment in time where they're going to go up a hell of a lot, but they're going to be volatile and they're going to have a drawdown. And then they're going to resurface, but there's going to be corporate failures and great winners. But it's very idiosyncratic. It's got nothing really to do with Trump. This is all to do with Honeywell, Boeing. Boeing. I would buy Boeing. Boeing's so Boeing has not been run as a good stock, but it's an exceptional risk proposition. So again, my 50-year chart, the Boeing chart is a positive sloping trend higher. Over time, the Boeing share price goes higher. You can't say that with General Motors or Ford. Over 50 years, the share price is like Nokia, is dead. Car companies should not exist in North America. But Boeing. So the great thing about Boeing is you can see the future. Like, let me tell me if you disagree, but in 5 years' time, in 10 years' time, in 15 years' time, in 20 years' time, I'll stop at that level. There are only 2 global manufacturers of aircraft, of commercial aircraft.
Right.
Only 2. And Boeing suffered a profound reputational travesty or whatever. Like, bad things happened, and a lot of it was complicit in the bad things happening, which was the disaster of the 777 or 737 and those fatalities. Yeah. Now, because of that, Boeing is trade. You can buy Boeing at the average price of the last 40 months. Forgive me, I use crazy little metrics, but it's a long time. Like, you can buy it at the average of the last 5 years, 5 or 6 years, and you're buying a company which always goes up, and has had a profound reputational crisis, which will clear, and as it clears, the share price will go higher. 50% of its business is defense. Defense is surging, of course, and an economy that grows faster is going to be really good for Boeing, good for its customers. So
I'm looking at a chart, Hugh. Would you wait to buy because the previous high, I'm looking at it right now, just broadly here, was December 2023 at about 264. So would you wait for it to exceed that high before you would buy and use that as your catalyst, or how would you play that?
So the way I play that, George, is I would I pursue the logic of Stan Druckenmiller. When ideas start fusing together, he invests first. He investigates
right.
Secondly, right? So, but the risk position he takes initially is not his max position. To get to his max position, he wants to wait for the levels that you cited. But he wants to take a position now because undoubtedly in 3 months' time, his great analyst will have told him about another amazing setup, and he'll forget about Boeing. But if Boeing's in his portfolio, he doesn't forget about it. So it's a memory chip.
Yeah.
Um, and you always invest first, and you begin to feel the sensation of ownership. That's intelligence. Just how does it feel owning it? It helps you, you know. And it's better to learn on a small chip than on a big chip. So, you know, um, that's kind of my words. I'm not anti gold. Everyone in gold hates me just now, and I'm playing to the gallery. You gold is stupid, you know. Um,
Feel a bit of a troll there, right?
it's a barometer of shock and awe. And my God, Trump is everything shock and awe. And I just think what goes without mention is why. Like, is there an economic rationale for why he's behaving like this? Is there a reason that really smart people like Besson hang around? Is there a reason? And I'm trying to tell you what that reason is. Now, the Financial Times, the New York Times, the Wall Street Journal, they are invested with billionaires and moats and the
Yeah,
Chinese
yeah,
Communist Party.
yeah.
And they're like, you know what? We loved the last 30 years. We don't want any change. And so especially the damn FT, every day is a glorification. Trump's a bozo, he's a loser. All the time, the European economy does what? It regulates more, and more, and it ossifies. So
Hugh, what did the real wages in Japan do in the 80s?
they grew. They grew.
Did they?
I don't have the exact figure, but they grew, yeah.
Yeah. Huh. Well, buddy, you give me a lot to think about, as always. As always, I sure appreciate you sharing your wisdom, not just with the audience, but with me. Usually, when I talk to you, it's more just selfish. It's not really to do a podcast. It's just to get you on here and kind of pick your brain. So, sincerely appreciate it. I guess the Substack again is Acid Capitalist. Are you going to come to Rebel Capitalist Live this year?
When, where? Yes.
It's the last week in May, same place, Orlando, the same hotel.
Okay, interesting. Because I'm thinking about doing more than one acid camp, summer camp
Well,
here.
don't do it then because I want to go.
Yeah, no, I was thinking, but the good thing is maybe I can do it the week after, so because you'll be in Florida and then you just come down, jump
That
down.
would be great.
We'll
Yeah, that
come.
would be great. All
Uh,
right. Well, we can talk about that.
but yeah,
Off.
I'll definitely be coming. Where in Florida? There's not that. Where's that? Oh my God, it's not. Tell me it's not Orlando.
Yeah, yeah, yeah.
Oh,
Your
George!
favorite place.
Wow.
We can go to Top Golf.
Oh, what about I hear what's it called? Del Rey Beach.
Oh, Delray
Oh,
Beach.
Del Rey. Move it to Del Rey Beach.
Yeah. Well, we'll talk about it in a couple weeks here.
Okay.
All right,
Okay.
bud. Have a good one. Thanks for coming on.
Thanks, George.